Traders, we have a ton to discuss today. We're going to talk about the Binance pullout from the FTX deal. We're going to preview the CPI report and give you everything you need to know about it. We're going to talk about Elon Musk dumping more Tesla shares, and we're also going to pull up some charts for you to look at. As you can see, this heat map was absolutely bloody. Tesla was down over 7%, and the energy stocks really bit the bullet today. We had a massive bloodbath in the equity indices. The ARK Innovation ETF was down as much as 6.54%. Our TLT long bond ETF did catch a bid. It finished out the day up 0.33%. We had very low up volume at only 8.7%. And the trend model did flip to a -3 reading ahead of the CPI report. Binance, oh my gosh, as a result of the corporate due diligence, as well as the latest news reports regarding mishandled customer funds and alleged US agency investigations, we have decided that we're not going to pursue the potential acquisition of FTX. So this was some pretty savage stuff. I mean, for anyone that hasn't been paying attention to this story, apparently FTX, as most of these big crypto financial institutions were, they were levered up to their eyeballs, and they were holding a bunch of collateral in their own FTT token. But apparently that FTT token was not really backed by anything, and Binance ended up dumping all of their FTT holdings. That basically triggered a huge liquidity squeeze, and essentially this is resulting in Sam Friedman going completely bankrupt, and really as of this moment, there's no buyer for FTX. So the whole crypto market is pretty much just left out in the lurch. We are seeing a massive liquidity event within that space, and it is just not a good look. The situation is definitely getting pretty ugly. We can see that Bitcoin's trading down under 16K, a level I never thought it would get to in this bear market. We have Ethereum trading down to 1,100 bucks. We're just having a huge liquidity event within this marketplace, and it's not good. We've been in a basing period since June, and now we are breaking below those lows. So as of right now, we don't have any resolution here. This is a problem without an answer, and I think at this point we really just have to monitor the situation and wait for news updates. I'm noticing that's a theme throughout this 2022 market, problems for which we have no answer. For example, the inflation outlook, no answer yet. The Russia and Ukraine crisis, no answer yet. Now we're getting liquidity issues in these various markets like crypto, no answer yet. The controlled demolition of growth stocks, no answer yet. And this is what it's like when you're facing a vicious bear market. Now, speaking of these problems for which we have no answer, Elon Musk, he musked us again. He sold at least $3.95 billion worth of Tesla shares after the Twitter deal. Elon Musk had said earlier in the summer that he was pretty much done selling Tesla, nothing left to see here. But here we go. He was at the root of a lot of the selling pressure from the last few days. Again, that's a problem where we don't really have an answer yet, because we don't know when Elon Musk is going to be done selling those shares. We got this headline today: Russia orders troops to leave the Ukrainian city of Kherson. Now that's a positive noise. Perhaps Russia is retreating a little bit. We got this headline yesterday saying that Ukraine's Zelensky, he's interested in genuine peace talks with Russia. This is incrementally good news. So for a market with so much bad news, hey, we'll take it. Now in our Pristine Capital weekend market analysis video, we discussed the fact that for this week, the CPI data point is the only thing that matters. Now let's take a look at what is expected for tomorrow. Our inflation rate month over month, the previous reading was a plus 0.4% month over month change. For this month, the consensus is that that is going to accelerate to a plus 0.6% change over the month of October. Now for our core inflation rate month over month, the market is expecting a deceleration. In the last month, we had a 0.6% advance. For this month of October, the market is pricing in a 0.5% advance. Now these economic forecasters, they've gotten this wrong time and time again this year, where they underestimate the inflation data. The data point comes out hotter than expected, and it causes a huge problem in the market. This theme that we've been experiencing, where growth stocks like the ARK Innovation ETF, like the NASDAQ, like the FANG stocks, they've just been getting taken to task. Anything that has negative operating cash flow has been getting absolutely destroyed, and until we get some positive news on the inflation front, that is likely not going to change. We are monitoring this trueflation rate, which is a real-time look at the inflation that Americans are actually experiencing, and this continues to decline to its lowest year-to-date level of 7.32%. If we get a good CPI print tomorrow, that's where we could see the market surge to the upside after having such a rough day today. And let's take a look at the CPI history. Courtesy of Bar Chart, this is awesome that they put this out there. These are the prior CPI forecasts and actual numbers throughout the year of 2022. And look at the pattern that we've been noticing. Pretty much every month, February, the forecast was 7.3%. Oh, we came in a little bit hotter at 7.5. Oh, for the month of April, we were expecting 8.4%. We came in a little bit hotter at 8.5. In the month of May, we were expecting 8.1%, came in a little hotter at 8.3. So these economic forecasters, they're just not really getting this right. As of October, however, this is where the pattern changed. This is an important nuance to keep in mind for tomorrow. The CPI forecast for October was plus 8.1%. The data point actually came in hotter at plus 8.2%. And the market put in a huge hammer candle. We had a massive gap lower, but then the market ended up closing higher. Who knows what the river's going to bring into tomorrow, but this is really the river card we've been waiting for. And I do think this is going to play a big role in determining, do we actually get a Santa Claus rally, or does the market really just slip into the abyss into the end of the year? In terms of our sector map, we did see a bloodbath across the board. The only survivors were the solar stocks up 0.95% and the cannabis stocks up 1.46%. Now these solar stocks, we were kind of teeing this up as, hey, if there is a red wave, perhaps these solar stocks could really get hit. Well, so far we've noticed that it's been quite the opposite. We're not really getting that red wave, and these solar stocks are performing very well. We did actually enter a starter position in the solar stock array for $19.86. This was a trade that we discussed within our Pristine Capital trading community in the pre-market. And that's really what's great about our community. We've got a bunch of smart guys in there that are all really just tossing ideas back and forth. And this was a trade idea that we concocted this morning. What was so compelling about Array's earnings report is that you can see here on my MarketSmith chart, they put up sales growth of 173% and EPS growth of 300%. This sales figure was expected to come in at around $399 million, came in at $515 million. 2023 estimated EPS is 94 cents. With the stock price right now at around $19.27, that is implying that this stock is trading at around 20 times forward earnings, which is pretty solid considering that Enphase, which is one of the major leaders within the solar category, is trading at a price to earnings ratio of 73. So this stock array could have a ways to go and a lot of room to run, especially if the pressure comes off of the overall market. Our dollar index finished out the session up 0.73%, and today really had all the hallmarks of just a liquidity grab. The one silver lining though is that crude oil continues to be weak. Could this have something to do with the Russia and Ukraine situation? Perhaps, but we did see a lot of these leading energy stocks really begin to fall apart. XLE was breaking out, really nice move, and we had a high volume sell-off. Even if we look at some of the leaders like Oxy was down almost 10% on the session. We fell back inside of value and we closed below this monthly point of control. So could this be a change of character within this dirty energy group? And remember, over the summer when we had that really nice run in the growth stocks, that happened in tandem with the sell-off in these energy stocks. So if we do want to see that rotation back into some of the high growth, high octane names within the market, back into the ARK Innovation ETF, back into bonds, we're going to need to see energy stocks come down a little bit. The S&P 500 could not make it back above this teal downward trend line. We ended up failing at that level, And now we close below the 20-day simple moving average as well as this monthly value area high. So is this beginning to look like we made a high, now we just made a lower high and we're gonna roll over? That could certainly happen, but again, it's all going to come down to the inflation print that we get tomorrow. Our ARK Innovation ETF really bit the bullet today on the back of the weakness in Tesla as well as Coinbase. Take a look at this. We broke down below this monthly value area and we are fast approaching this Venom S1 pivot of $31.47. Now the only way we're going to see that ARK Innovation ETF get its mojo back is if Tesla rises from the ashes. And again, this is a problem for which we do not currently have a solution. We are not certain that Elon Musk is done selling his shares. When he is finally done, or if we get a strong CPI report tomorrow, meaning it comes in lighter than expected, that's where this group of stocks could really come back to life. With all this said, there are some stocks that are showing some really nice relative strength. When you're emerging from a bear market, there are leadership stocks that are typically the first names to break back out to new all-time high ground, and we're starting to see that in a few names. SanM, this stock just recently posted earnings and they put up some really impressive numbers. As of right now, this stock has good sales growth, good earnings growth, and it's only trading at a price to earnings ratio of about 13. Could this be a leadership stock if we end up moving out of this bear market? Absolutely. ALB, this is one of our inflation beneficiary stocks. After putting up its earnings report, it has sprinted to the upside. It broke out of this monthly value area, and even though the market was very weak today, we put in a nice inside candle. RS, Reliance Steel, this name is putting in a VCP pattern. This stock does not have the most impressive earnings and sales growth, but it is an inflation beneficiary. And this chart pattern just doesn't lie. This is one of the better charts that I'm seeing right now in the market. IT, another stock that responded very well to its earnings report and is trading right at its new all-time highs. And then we have KOF, which is an international company that deals with the packaging and bottling of Coca-Cola. This is another name that could be a beneficiary if the dollar weakens, and another name that's trading right around those prior all-time highs. Now, these charts that we just walked through, are these the FinTwit favorite stocks that everyone is sharing charts of online? No. Are they names that most people have ever even heard of before? No, but that is typically the way it works with new leadership stocks. With that being said, we're finally going to get our river card tomorrow, which is that CPI report. Best of luck out there, everyone. Please make sure you like this video, subscribe to the channel. If you have any feedback or commentary, be sure to post that below.